Ladies and gentlemen, good day and welcome to Ellenbarrie Industrial Gases Limited Q1 FY26 conference call hosted by Radhi Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touch-tone phone. Please note that this conference is being recorded. To discuss Q1 and FY26 business performance, we have with us the senior management team of Ellenbarrie Industrial Gases Limited, represented by Mr. Padam Kumar Agarwala, Chairman and Managing Director, Mr. Varun Agarwal, Joint Managing Director, and Mr. K. Srinivas Prasad, Chief Financial Officer. Before we proceed with this call, I would like to mention that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. The company also undertakes no obligation to update any forward-looking statements to reflect developments that occurs after the statement is made. Documents relating to the company's financial performance, including investor presentation, have been uploaded on the stock exchange and company's website. I now hand the conference over to Mr. Padam Kumar Agarwala, Chairman and Managing Director. Thank you, and over to you, sir.
Thank you, Team Radhi. Dear partners, thank you for joining this call and your interest in Ellenbarrie. This is the first call post-listing of the company's shares on major stock exchanges, and I'm very happy to be hosting this. We look forward to your continued engagement. The results for the period ending June are in your hands. We have had a strong Q1. There is a 24% year-on-year growth in revenue and almost 40% growth, year-on-year growth in EBITDA. EBITDA margins are strong at about 37%, and we hope to improve further from here. There has been ramp-up of recently commissioned facilities at Kurnool and Tata Steel Metallics Division. Argon revenue is close to 10% of the total gas revenue. With increased production, the share of argon in revenue will also increase further, leading to further improvement in margins. We have already achieved a more than decent loading of our two newly commissioned facilities. Growth shall continue with further ramp-up of these two facilities. Additionally, we expect our merchant plant in East India to commence operation in October 2025 and another on-site plant for a steel mill in March 2026. We shall continue to look at building additional capacities in merchant and on-site towards furtherance of our core business of ASU gases. Our focus shall be on geographical expansion as well, and we hope to be a pan-India company very shortly. We are looking at inorganic growth in synergistic areas. Acquisition of a cylinder filling assets in Bangalore is a move in that direction. This shall provide value addition to available products from Kurnool. The facility shall be used for secondary distribution of existing available products in the area. Thank you for your time and attention. Mr. Srinivas, CFO, now shall discuss actual numbers, and along with our Joint Managing Director, Mr. Varun Agarwal, shall be open for any questions which will come up. Thank you.
Thank you, sir. This is Srinivas, the Chief Financial Officer. A very good evening to you all. As you know, our company got listed on 1st of July. In a way, Q1 is significant, being the last of our quarters as an unlisted company. Our results for the quarter ending June 2025 records a growth in revenue of 24% year-on-year basis and an EBITDA growth of 40% over the same period. As you know, EBITDA margin is the key metrics for our kind of business. It has improved from 30% of our revenue to 37% on a year-on-year basis. This margin expansion can be attributed to few major factors. One is in-house production of our argon, which happens to be the product with the highest value addition. Simultaneously, argon revenue, which was only 7% a year ago of our total revenue, has gone up to 9% over the same period, over the last one quarter. So contribution from the second factor being contribution from new on-site business, which have come offline during last few months. So in this case, it is Tata Steel Metallics division. And the third point which contributes to our margin expansion is volume growth, which is coming from, again, the ramping up of new capacities which have been added a couple of quarters back. Therefore, margin expansion is happening on a sustainable basis, as you can see. We see that Q2 revenue and margins expanding further as the projects again ramp up. And in the second half of the year, once the proposed two new projects, they are commissioned, we expect the second half to be even better than the first half. Growth momentum is expected to continue going forward with more projects coming online over the next few quarters. Coming to the capital work in progress, as of now, we have a position of about 52 crores, and we are committed to spend around 250 crores over next one and a half years. In terms of IPO proceeds, which we received in first week of July, we have started deploying the funds towards the objects of the IPO. We have already spent, the company has already repaid about 210 crores borrowings in the first quarter of July, most of it being long-term borrowings. So with a strong unlevered balance sheet, the road is open for taking up new capital expenditures and new capacity creation. Thank you. We are now open for a question answer.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Dayanand Mittal from JM Financial. Please go ahead.
Yeah. Good evening, Padamji, Varunji, and Srinivasji. Thanks for that brief summary of your results. My first question is around just a quick wrap up of your project updates. You briefly summarized, but if you can just take us maybe project by project in terms of Kurnool, how is the utilization currently, and by when do you expect it to reach maybe optimum utilization of 90-95%? That's one. And the other two projects, broad timeline in terms of commissioning, you mentioned it, but yeah, in terms of ramp up as well, if you give a guidance, by when do you see it reaching to optimum utilization? Would it be 2 years or longer? If you can give those details, and hence what kind of volume growth we can envisage over the next 2-3 year period. Yeah, that would be my first question.
Thanks, Dayanand, for that question. Basically all of our facilities, apart from the Kurnool plant, are running at full capacity utilization. The Kurnool plant, the ramp up is happening currently. As on Q1, it was about 60-65%. Q2 capacity utilization will be significantly higher than Q1, and we would expect this plant to reach sort of the optimum capacity utilization of about 85-90%, maybe sort of in the second half of this year. In terms of the new projects that are coming up, so as we mentioned, we have a merchant plant in Eastern India, which will be up and running in October of this year. We have an on-site plant which is coming up in Q4 of this year. And then we have a merchant plant in North India, which will be up and running in end of Q1 of next financial year. Now, when it comes to ramp up of these plants, the way that the business model works for on-site plants is that we, from day one itself, have a take or pay arrangement with the off-taker for whom we set up the capacity. So in that sense, for an on-site plant, the capacity utilization becomes irrelevant because the revenues of the company are guaranteed from that plant. When it comes to merchant plants, we typically take about an 18 to 24 month ramp-up period. So let's say if a plant is starting in October of 2025, we would expect the entire capacity to be utilized by, say, March of 2027. Similarly, the plant which will start in the next financial year, again, will take about 18 to 24 months to ramp up. Now, if we sort of put this all together, I would say that, in terms of revenue growth, we definitely, the kind of revenue growth that we shared Q1 to Q1, which was about 25%, we definitely expect at least this level of revenue growth to continue. And, as we keep adding more capacity, the revenue growth will sort of keep coming through. So, we definitely think that for next 2 to 3 financial years, there's a strong growth runway for us.
Thanks, Varunji, for the detailed answer. Second thing, in terms of your aspiration to become a pan-India player, so if you can just detail a bit more about the acquisition which you did, how it improves your business model in the south, and also in terms of future plans, in case you may like to disclose now, or else it's fine, about how do you want to get into the western part of the country or other geographies that you may have a plan to.
Yeah, so this acquisition actually is of course, it's quite a small acquisition, but in terms of, and it's, the outlay is only about 5.5 crores. But what it does is it gives us a good penetration into the Bangalore market. Now, why that is important for us is because our Kurnool plant, which is located halfway between Hyderabad and Bangalore, ultimately we have to sell this product to these 2 key markets. So, having a local presence in Bangalore allows us to do a lot more value addition with our production. Sometimes also what happens is, customers want full variety of gases, not just liquefied gases, but cylinder gases. So having a local cylinder filling station in Bangalore will allow us to cater to those kind of customers. It also allows us to cater to medical customers because, medical customers, because it's a life and death kind of a situation when it comes to oxygen. So they don't want to take supplies from someone who's located, 200-300 kilometers away. So having a local presence in Bangalore again helps us target the medical customers as well. So in that sense, it's a very strategic kind of complementary acquisition for us to sort of add more value and load up our Kurnool facility. In terms of becoming an all-India player, of course, we have something coming up in North. We are actively looking at something in the West as well. And, at the appropriate time, we will, of course, make the necessary announcement, with respect to that. But currently, it is still in the drawing board stage. So nothing really that we can talk about at this moment. But definitely you should expect an announcement from us fairly soon.
Thank you, Varunji. Last question just on argan. So you mentioned your revenue from argan this quarter was around 9 to 10%, from 7%, I think, YOY, if I'm correct. So how do you see this ramping up, let's say, let's say, exit FY26, exit FY27, so next 2-3 years, how it could go, where do you see it ramping up to, and what could be the peak revenue from argan, let's say, when everything is at optimum utilization?
So I think we would look at an argan revenue of somewhere in the region of about 15-odd%. That's 15% plus, when all this capacity sort of kicks in. And of course, having a 15% plus contribution from argan would obviously also feed into the EBITDA margins to some extent. So I think one of our key strategies going forward is to actually really focus on our marketing and sort of value addition when it comes to argan.
Thanks, Varunji. Thanks for detailed answer.
Thanks, Anand.
Thank you. Next question is from the line of Raman KV from Sequent Investments. Please go ahead.
Hello, sir. Thank you for allowing me to ask question. Sir, first question, I have two questions. One is with respect to the capacity. Can you give the current capacity figures and capacity figures for FY25 and FY for the current quarter, as well as how much capacity will be coming up by the end of this year?
Sure. So as on FY25 end, we were at 1370 tons per day. That's 1370. When we talk about the capacity, we are talking of capacity of liquid oxygen, liquid nitrogen, liquid argon, as well as the gaseous oxygen production. All of this put together is about 1370 tons per day, which is owned and operated by us. We have not added any new capacity in Q1. However, we have capacity additions which are planned in the second half of this year. So that will take our capacity as on end of FY26 from 1370 tons per day to 1910 tons per day. And basis the projects that we are currently constructing and sort of planning, FY27 capacity would be 2130 tons per day. 2130 tons per day is what we have planned in FY27. Now, of course, if we do announce any new projects, there could be an upside to this number. But currently, basis what we are currently sort of executing and planning, it is 2130 tons per day. So 1370 becomes 1910 and 1910 becomes 2130. So that's the evolution over FY25, 26 and 27.
Okay, sir. Understood. So, just a follow-up with respect to your new capacity coming. So, from the presentation, I can see there are 3 new capacities coming, 2 in West Bengal and 1 with respect to North India, right?
That's right.
And so what about the other facility which you were talking about, which will be commenced in March 2026?
Yes, that is one out of the 3 that you have mentioned.
So that is the North Indian plant, which is with respect to liquid ASU and...
No, that one is the on-site plant. The one which is in March 26, yes.
And that the capacity is 2,050 tons per day. The on-site
that one is 320 tons per day.
Okay, sir. So, and my second and final question is with respect to TAM, sir. I just wanted to understand what is the total addressable market with respect to, this the business which we are in? And if you can you please provide the breakup between, different gases, if it's possible?
Sure. So, and let me just fetch that. So, basically, I think the total market size is about roughly about 14 to 15,000 crores. And that is largely driven by the three air gases, oxygen, nitrogen, and argon. Oxygen is, I would say, the largest share, about close to about 40%. Basis the last, these figures are basis the report which was commissioned by Frost and Sullivan at the time of our IPO. So oxygen is the largest, and then nitrogen, followed by argon. Okay, sir.
So just one doubt. This Concall facility, which is in Andhra Pradesh, is this started operational, or will it be operational in the second half as well?
No, this is operational. We started this in the second half of the last financial year. But typically these plants take time to ramp up because we need to sort of sign up contracts with new customers. So what's happening is that every quarter the revenue which is being generated from this plant is increasing until we reach the optimum capacity utilization. So currently we are at about 60 to 65% capacity utilization in this plant. And, as we increase that, which we are doing every quarter, as we keep increasing that capacity utilization, the revenues from that plant will keep increasing until we sort of reach that 90-95% level.
And sir, I just have one doubt with respect to the difference between on-site facility and bulk distribution facility. What's the difference between both of them?
So, on-site facility is basically a plant where we set up the plant inside the premises of a customer, and we supply gases via pipeline to that customer. Sometimes in case of an on-site, we can set up a plant which is larger than the demand of the customer inside whose factory we have set up our plant. In that case, the surplus production that we are generating, so that is the on-site model. The merchant model is where we sort of buy a piece of land, we set up a plant, and we market it to the production to, let's say, 300-400 customers over a 500 kilometer radius. So that's the basic model. One is inside a customer's premises and one is an independent plant.
Okay. Thank you, sir.
Thank you.
Thank you. Next question is from the line of Gautam Rajesh from Leo Capital. Please go ahead.
Hi, sir. Good evening. Thank you for the opportunity. I had two questions. My first question was, what sort of market share do we have in our coal products, and who would be our key competitors? That would be my first question, sir.
So we have a market share currently of, I would say, about 4%. So very, very small market share, which means that there is a lot of room for us to grow. Our key competitors would be large MNC companies such as Linde, who's sort of the listed peer and the largest competitor, and also Inox Air Products. So these two would be the largest players in this industry in terms of market share. There are a few other MNC players as well, but these two are the largest, and we would be sort of the fourth or fifth largest company in the country.
Sir, what would be their market share? First one was L&T, right?
Sorry?
What would be their market share? Inox, their products, and the first one, I couldn't get the first name. And what would
First one is Linde India. So Linde and Inox would each be at, somewhere close to about 25% each.
Understood. Okay. And my next question was, what sort of growth and margin is the company targeting over the next, let's say, 3 to 4 years?
So look, first I'll answer the question on margins. I think our margins were about 37% in terms of EBITDA. We don't expect these margins to go down. In fact, as we sort of build up more capacities, have higher argon production, more on-site plants, we would expect, to at least maintain these margins with a sort of potential upside to these EBITDA margin numbers. In terms of growth, revenue growth, last year, if you compare the Q1 versus Q1 numbers, so it's about a 25% year-on-year growth. I think we are fairly with the sort of pipeline that we have in terms of our plants that we are setting up, the capacities that we are rolling out, and the kind of, capacities that we are currently, which are on the drawing board stage, but of course, some of these will be finalized going forward. We are fairly confident of maintaining at least this growth, if not higher, over the next at least 2 to 3 years.
Understood. So you're saying that the current 25% growth Q on Q, you can, based on your investing, you can maintain for 2 to 3 years at least.
Yeah, and I'm talking about annual growth numbers because, sometimes quarter on quarter, it doesn't give you a very accurate picture because the growth will come sort of in, its growth is lumpy, like when a new plant gets commissioned, then you'll see significant growth. So I think probably year on year is a better way to look at it.
Understood. Thank you. That would be from my side. All the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. Should you have a follow-up questions, please rejoin the queue. Next question is from the line of Suvan Mittal from MFC. Please go ahead.
Hello, sir. Thank you for the opportunity. I have 2 questions, mainly the first being from the DRHP. Is that over the due course of 3 years of FY 24, 23, 22, our power field expense in 22 was 26%, it shooted to 36, and then 24 it is back to 28. So in FY 23 we had a sudden surge in that. So if you could give some reason as to what was the reason, because it's a major cost, and do we anticipate such incidents in the coming FYs?
No, I think, sorry, go ahead.
Can you please repeat, Suvan? You're talking about which year?
Power expenses in fiscal 23, it was at around 73 odd crores, which is 36% of the revenue. And in FY 22, It was 26%. So it was a considerable jump. And we are already having a high EBITDA margin. So the only thing which can affect is power expenses. So do we anticipate such a surge? And if you could give some color as to why was the surge in FY 23?
Yeah, you're right. As you know, power is our basic raw material for us, for our industry. And 23, 24, there must have been some tariff increase, especially in the south, which does typically increase the power cost. But at the same time, we try to, over a long period, we try to optimize that through purchase of from the exchange, power from the exchange, which normally comes at a discount. And also on a long-term basis, sustainable basis, we take actions to improve the power cost by better utilization of the loading of the plant and those kind of things. So 23, 24, I remember there was some spike in power in the south.
No, No, and I think
it was between FY 22 and 23. Like from 26%, it increased by 12 odd percentage to 36%. In fact, for 23-24, it decreased from 36 to 28. But from 22-23, it increased by 12 odd basis points, 12 percentage points.
No, I think, one more thing which I'd like to add is that, the new capacities that we have recently commissioned, as well as the ones that are currently under construction, those are significantly more efficient in terms of power consumption. So, I'm answering the second half of your question where, is there a risk of this kind of jump happening again? And, you'll see gradually that the power cost as a percentage of revenue will actually sort of trend down levels just because of the greater efficiency of the plants. Regarding your question on FY 23, maybe we'll be able to get back to you at post this call.
One major factor was 21-22 was a COVID affected year when the revenue was much higher than the going level of prices. So that's why it's a misnomer to look at power cost as a percentage of revenue. The average realization was much higher in 21-22.
Okay. So my second question being, we have mainly been a company operating in oxygen and nitrogen, and now you have been stating that argon can contribute significantly up to 15%. But in terms of TAM, hydrogen also has a good amount of market size. So do we expect any further additions or contribution from hydrogen as a gas in the coming 3-5 period or long-term perspective?
We are not, as of now, we are not much into the hydrogen as you perceive, which is more related to non-conventional energy and green economy and so on. Of course, our hydrogen is produced by way of electrolysis. So this is the same method which is used for production of green hydrogen. As of now, this plant capacity is small, and we are just testing the waters before actually making a major entry into this business. Our present customers are different from the buyers or manufacturers of green hydrogen. We would generally supply to power plants and Vanaspati units and so on. Going forward, yes, hydrogen appears to be a promising market, and this I would say, for us, it is more of a pilot project. We will understand the business, and moving forward, maybe take some major investment decisions after we are sure of what we want to do.
Okay, sir. Thank you. That's it.
Thank you.
Thank you. Next question is from the line of Parikshit Kabra from PKD. Please go ahead.
Hi. Thank you for the opportunity. My first question is a bit of a basic one. Your slide shows that your operational capacity is 3,800 odd TPD, but earlier in the presentation you said that your current capacity is only about, 1370 going to 1910. So how are you segregating the two numbers? Can you please explain that?
So Parikshit, there's just one difference between the two numbers. There is a 2,500 tons per day plant which is being operated by us, which is coming in that larger figure. Whereas the figure that I am mentioning, the 1370 figure, those are plants which are owned and operated by us. So those are the plants on our balance sheet, the 1370 tons per day. In addition, there is a 2,500 tons per day plant which we operate but which is not on our balance sheet. So, for the purposes of DRHP, we had to include it in our production capacity, but because it is effectively a capacity which is operated by us. However, the true capacity which is owned and operated by us on our balance sheet is 1370 tons per day. So that's the difference between the two figures.
Got it. But essentially, this 2,500 TPD plant, you are operating and earning revenue from, right? So from a revenue generation perspective, I should look at 3,800 TPD as the correct number.
So we are earning a revenue, but here again, the revenue what we earn is a fixed fee every month. It's not, let's say, we are not earning double the revenue of 1,300 just from this one plant. So it's a bit misleading in that sense. The revenue is not proportionate to the capacity here.
Got it. Understood. Okay, so my second question is, the second question I had was in terms of your approach to how you're trying to build out your facilities. You're trying to become a pan-India company. I was wondering whether this is more of a geographical play, and so rather having a cluster approach and going out into particular areas might be a more prudent approach. I just wanted to hear your thoughts on that.
No, you're right. I think, there is a benefit of having multiple plants in a cluster, and that's what we have been doing. So, while we are looking at becoming a pan-India player, at the same time, it's not that we are ignoring the geographies that we are already strong in. Now, there are a couple of reasons to ultimately want to become a pan-India player because, for example, the western part of the country is where a lot of industrial growth is happening. And, by not being present there, we have actually realized that is actually a sort of a significant disadvantage because, we are missing out on a lot of new business opportunities that are coming up in Western India. So, at some point, of course, we do want to be an all-India company and, now that we have achieved a certain critical mass, at least in our home geographies of East and South, we felt that it was prudent to actually now take a step into North to begin with, and we are also currently evaluating something in the West. And, we feel this is the correct time because the balance sheet is strong, the company is a lot more visible as a brand, especially post-IPO. So, we felt this is the right time, to embark on this pan-India expansion.
Perfect. Thank you so much. And the last question I have is, Linde gets the technology from their global company. Inox also has a partnership with a global company. Where do you get your technology from, and how do you compete with these MNCs? Of course, they're much larger, but what is your right to win here?
We have our own in-house team who keep track of the global developments in terms of production technology. Our team, they keep themselves updated, and generally the engineering team would be able to take care of any challenges in this direction without any external support.
Got it. So you're saying our technology is in-house completely?
Absolutely.
And we are able to compete with Linde and Inox with their foreign technological stack and technology stack and still beat them? Like, what is our right to win here? Are we better than them in pricing?
I wouldn't say that we'll beat them. We are generally, I would say, it's a situation of coexistence. In terms of pricing, generally the market finds the level of the pricing, and the current market pricing, etc., leaves us with decent EBITDA margins, as you can already see. So generally, I wouldn't say our prices are lower than Linde or Linde's prices are lower than us. Generally, everybody sells as per the market. The competition is on service and customer connect.
Got it. All right, perfect. Thank you so much for your time.
Thank you. Next question is from the line of Shiv Kumar Prajapati from Ambit Investment Advisors. Please go ahead.
Yeah, hi, sir. Thanks for taking my question. First of all, congratulations to the whole management for the successful IPO. So, sir, my first question is on the seasonality factor, like how the all 4 quarters of a year looks for us, and is there any factor of temperature that plays over our cost structure? I'm asking this question because obviously you gave some clarity on EBITDA margin. Because if I look at the EBITDA margin, say for FY21, it is 26%, then it goes to 33% next year, then comes down to 16%, then again 23%, and now 34%. And you also highlighted that there's potential of upside from here. Just want more clarity, like what exactly is happening, why these margins are volatile.
So I think historically, if you see, there was a bit of volatility in this FY21-22 sort of period due to COVID, because COVID had pushed up the margins, and then post-COVID there was a decline in the margin. So that's obviously a very one-off and exceptional kind of a scenario. But going forward, if you see, FY25, it was around 34%. This quarter it is 37%. And now this is sort of the steady state margin, which as we had highlighted, that as we build up more capacity, as we increase the production of argon, more on-site plants, as the size of the company grows, as the plants get ramped up, all these things will lead to an improvement in the margins. And I think if you look at sort of a steady state number for margins, it would be somewhere around this number or maybe a couple of percentage points higher, and that's when we sort of become of a reasonable size where we can sort of maintain these margins. Your first question about the seasonality, there is no seasonality as such in the industry. However, sometimes there can be quarter-on-quarter movements in revenue due to maybe certain ad hoc orders. Maybe, we have a division, project engineering division, where we also sell certain equipment and medical gas pipeline systems. So, booking of those revenues is typically very lumpy. So, those things may lead to quarter-on-quarter differences. But broadly, if you compare year on year, it should be, you should see steady growth over the next several years.
Understood, sir. And sir, my next question is around 20% of your revenue comes from the government or PSUs. So, is there any difference between difference for the term?
Sorry, could you repeat
Sorry
that question?
Mr. Prajapati,
Yes.
may we please request you to please repeat your question, sir?
Yes, sure. So I was saying around 20% of our revenue comes from government or say PSUs. I just want to understand, does the terms and conditions differ here compared to other entities that we serve? Just want to understand the credit period, the payment cycle.
Sure. Got it.
Yes.
So look, typically the major difference between a private sector customer and a government customer is the length of the contract. That's the main difference. I think other than that, the payment terms, etc., are more or less similar. Now, when I say length of the contract, typically with our private sector customers, we have typical duration of contract as 5 years. Whereas with public sector customers, it is typically 1 to 2 years. So, and then it sort of keeps getting re-tendered. Having said that, there are number of public sector customers to whom we have been supplying for, more than a decade. So it's not that every 2 years they change suppliers, but yes, the length of the contract is by the mandatory process, they have to keep doing tenders every 1 year or 2 years.
That's helpful, sir. And sir, my last question is, just want to understand more about the gases that we supply. So could you please throw some light on the products that we supply, the realizations and the margins?
So our primary products are the air gases, which means where the raw material is atmospheric air. We take this air and we split it into oxygen, nitrogen, and argon. And these are the three main products. Together, these products account for close to 90% of our revenue. And apart from that, we do supply a few other gases like acetylene, hydrogen, carbon dioxide, etc. But the main gases continue to be oxygen, nitrogen, and argon. Now, in terms of margins, I would say that oxygen and nitrogen have sort of similar margins, which are slightly lower than the overall EBITDA margin of the company, and argon has a margin which is significantly higher than the EBITDA margin of the company. So therefore, on a blended basis, that's how we achieve that 37% EBITDA margin.
Got it, sir. Sir, do we supply helium gases?
We do supply helium, yes, but helium is not manufactured in India. All of India's helium is imported.
Okay, great, sir. Thank you so much and best of luck.
Thank you.
Thank you.
Thank you. Next question is from the line of Sanjay Nandi from VT Capital. Please go ahead.
Hello. Good evening, sir. Thank you for the opportunity. Hello. Yeah, can you hear me, sir?
Yes, we can hear you. Please go ahead.
Sir, can you just describe the operating margins which we generate from argon compared to oxygen and nitrogen, if it's possible to quantify that number, sir?
So, without giving a specific number, what we would say is that oxygen and nitrogen are lower margin compared to argon, right? Argon has a significantly higher margin because basically the cost to make all these gases is more or less the same. But in terms of realization, argon is, 3 to 4x at least, or maybe even higher than oxygen and nitrogen. So therefore, the margin on argon is significantly higher. I would say, 1.5 to 2 times the margin of the blended EBITDA margin of the company.
Got it, sir. And so just one more question from my side, just to mention in the initial conversation, we are planning to increase our argon sales from 4% or to 15% in the near future, right? So if this would be the margins for the argon, which is 3-4x from the existing oxygen and nitrogen, so then what kind of peak margin can we see, sir, once that argon sales shoots up to 15% of total sales?
See, I think, 37 is what we have achieved right now. As I mentioned in our initial comments, that we think this is a sustainable margin with some upside from this incremental argon. I think, without giving a specific number, I would say that there is a potential upside to this margin number with increased argon production.
Got it. And sir, if we compare us with our global peers like Linde's and the world so they are having a market share of 25% as we talk. And we are at 4% talking something like that. So if companies like Linde, they are growing at a CAGR of roughly 7 to 8% on an annual basis, what kind of confidence we are getting or what kind of demand drivers are there for which we can foresee us for 25% kind of sales growth going forward, sir?
See, I think one thing is that, as you grow larger, then, that base becomes larger, right? So then the percentage growth, to maintain a very high percentage growth becomes more challenging the larger you grow. In our case, because the base is significantly smaller, at only about 4% or so, so the room for us to grow is quite high. And, given the way that we are adding capacity, I don't think there is a challenge in terms of our growth. I think we'll continue to do significantly higher growth than the industry average. And, last year as well, if you compare Q1 to Q1, we've done 25%. I think we'll continue to grow at those sort of numbers with some upside. And of course, the fact that we have now a cash surplus unlevered sheet, enables us to put up significant amount of capex to really charge up our growth. So I don't think we'll be at any point, we'll be definitely significantly higher growth than the industry average.
Got it, sir. And for the operating margins as well, sir, we are talking about 37% kind of EBITDA as we talk in Q1, whereas the peers like Linde, they are like touching on margins of roughly 31%. So is there any probability of getting that margin increased higher from the Linde side, or our margins might contract going forward?
Yeah, I don't want to comment on Linde, but definitely I can tell you about our numbers, and we don't expect this margin to really decline. In fact, as I mentioned that, from our perspective, we see this number to sustain and maybe with a small upside.
Great, sir. Great, sir. That's all my side. Thank you so much, sir, for the detailed clarifications, and wish you all the very best, sir.
Thank you.
Thank you. Participants, please restrict your questions to 2 per participants. If you have a follow-up questions, please rejoin the queue. Next question is from the line of Raman KV from Sequin Investments. Please go ahead.
Hello, sir. Thank you again for allowing me to ask a follow-up question. I just wanted to understand, with respect to, for example, let's say we have around 100 tons per day capacity. How much revenue can we do from that particular, and how much capex is required? I just want to understand the unit economics of the business.
So, very broadly, of course, like any other industry, 100 tons capacity cost and a 200 tons capacity cost will not increase proportionately, right? So, let me give you a live example where we are putting up a 220 tons per day capacity. That 220 tons per day capacity is costing us about 160 crores, right?
Okay.
And that has a revenue potential of somewhere in the region of 100 to 120 crores.
Okay.
So those are the broad numbers. Now, obviously a 100 tons capacity will not cost half of this, right? And so it doesn't work in a linear way.
Oh, okay, I understood, sir. So, but from what I can see is that around 600 tons, roughly about speaking, 600 tons capacity is being added from FY25 to 26. Am I right?
Yes.
So this can potentially improve our revenue by around 500 crores per annual per year.
No, so there's a distinction here, Raman, because basically what I told you is for a merchant market plant, right? For an on-site plant, the way the business model works is that we get a fixed revenue from the captive customer, which is significantly lower because all the costs are borne by the captive consumer as well. So, you can extrapolate that for merchant market capacity, but not for on-site capacity. On-site capacity, typically, the revenues will be very limited. For example, a 300 tons plant, which we are setting up now, the on-site plant, has a revenue potential of only about 25 crores a year, because all the costs are borne by the on-site customer.
Okay, sir.
So that number goes straight into our margin.
Oh, that will direct. There is no. Okay, yeah. I got it. Thank you, sir.
Yeah.
Thank you. Next question is from the line of Aditya Arora from P4 Capital. Please go ahead.
So, sir, I just basically had one question. When you say your capacity is 100 TPD per day, like what is the split between oxygen, nitrogen, and argon between that?
So it depends on how we configure the plant. Typical capacity of an oxygen plant or an air separation plant would be, let's say, about, and this is a very typical kind of a configuration, maybe about 75% or 70% oxygen, 20-25% nitrogen, and about 5% argon. So that's a very typical sort of configuration. Now argon is something which obviously we want to maximize as much as possible because that's a high value. But that is restricted because the quantum of argon in air is also very less. So, there are those complications as well when it comes to designing the capacity.
Okay. Yeah. Thank you, sir. Those were my questions.
Thank you. Ladies and gentlemen, we will take this as the last question for the day. I would now like to hand the conference over to the management for the closing comments.
So, thank you all participants for joining and asking a lot of very interesting questions. Going public for us is a key milestone for our company. It reflects our commitment to transparency, governance, and sustainable value creation. We acknowledge the responsibilities of being a listed company, and we are committed to upholding high standards of accountability and integrity while delivering sustainable growth and delivering on the commitments that we make. Thank you for your time and attention today. If you have any further queries, please feel free to reach out to our investor relations team. Thank you, everyone.
Thank you so much, sir. On behalf of Ellenbarrie Industrial Gases Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.